XLM holders, crypto investors, and anyone closely following Stellar, this is a moment you need to pay attention to. Something major is happening behind the scenes, and it has the potential to completely redefine XLM's role in the institutional crypto space. After months of relative quiet, Stellar isn't just making small moves or incremental updates. It's orchestrating a comeback that's structural, strategic, and deeply rooted in real-world adoption. This is not speculation or hype. This is tangible, measurable, and already impacting how institutions think about digital assets. Consider the bigger picture. Stellar has always been more than a token for trading. Its blockchain was built from the ground up to serve as a bridge for payments, cross-border transfers, and enterprise-level integration. Yet, for years, retail investors fixated on charts, price predictions, and short-term gains, often missing the critical infrastructure work happening quietly in the background. Banks, payment providers, fintech startups, and even multinational corporations are exploring Stellar's network for high-volume, low-cost, and highly reliable financial operations. These moves don't make headlines like moonshot predictions, but they are the very foundation of long-term, sustainable adoption. Now, the comeback we're witnessing isn't hypothetical. It's already in motion. Stellar has rolled out leadership updates, major integration announcements, and network enhancements that signal serious institutional traction. Banks are testing XLM as a liquidity solution, fintech platforms are exploring stablecoin frameworks built on Stellar, and corporate payment systems are beginning to rely on its blockchain infrastructure for faster, cheaper, and more transparent transfers. These developments are cumulative, and together they create a wave of institutional momentum that is only just starting to show its full force. Here's the key. XLM's resurgence isn't just about price. It's about credibility, trust, and functional adoption. Unlike purely speculative tokens, XLM's value proposition comes from being embedded into operational workflows that move real money across borders and in real time. Every partnership, every integration, and every test of the network increases the structural relevance of XLM, setting the stage for a comeback that could have far-reaching implications for both institutional investors and everyday holders. Stick with me until the very end, because I'm going to break down exactly why XLM's institutional adoption is accelerating, which developments are driving this comeback, and why this could be one of the most important moments in Stellar's history. By the time we're done, you'll see that XLM is not just recovering. It's positioning itself for a strategic resurgence that could redefine its market relevance and long-term potential. Before we dive in, do this. Hit like, subscribe, and tap the notification bell so you never miss updates on Stellar, XLM, and other high-impact institutional developments. Share this with anyone holding XLM or anyone interested in crypto projects with real-world adoption and long-term growth potential, because what's happening with Stellar right now is a story you cannot afford to ignore. To truly understand why XLM's institutional comeback is just getting started, we need to go back to the core foundation of the Stellar network and why it has always been uniquely positioned for institutional adoption. Unlike many cryptocurrencies that are primarily designed for speculation, Stellar was engineered from day one to serve real-world financial needs. Its blockchain is fast, scalable, and cost-effective, making it an ideal choice for banks, fintech platforms, and payment providers looking to move value globally with efficiency and transparency. The first key aspect is cross-border payment capability. Traditional banking systems rely on slow, costly, and often opaque processes to move money across borders. Stellar eliminates these barriers by providing real-time settlement with minimal fees, which is exactly what institutions need when transferring large volumes of capital. This makes it not just a cryptocurrency, but a strategic infrastructure tool for global finance. Next, consider tokenization and stablecoins. Stellar allows the creation of digital assets that are backed by real-world value, including stablecoins pegged to fiat currencies. This capability opens doors for banks and fintech companies to implement digital cash solutions that integrate seamlessly with existing financial systems. Institutional players are drawn to XLM because it offers both flexibility and reliability, giving them the ability to experiment with new financial products while maintaining regulatory compliance. Another critical foundation is network partnerships and integrations. Stellar has been quietly working with major payment providers, remittance companies, and banks to integrate its technology into their workflows. These collaborations are not just marketing moves, they are functional adoptions, meaning institutions are actually using XLM for liquidity, settlement, and cross-border transfers. Each integration strengthens the network's credibility and makes it increasingly difficult for competitors to displace Stellar in these use cases. Finally, we need to look at regulatory positioning. Stellar has been proactive in engaging with regulators and ensuring that its network operates in a compliant manner. This is essential for institutional adoption, because banks and large corporations cannot risk operating on networks that could face regulatory shutdowns or legal uncertainty. By building regulatory trust, Stellar positions XLM not just as a digital token, but as a reliable component of global finance infrastructure. In short, this is about understanding that Stellar's resurgence is structural, not speculative. Its speed, scalability, tokenization features, institutional partnerships, and regulatory compliance form a foundation that makes XLM a preferred choice for institutions entering the crypto space. This groundwork is what enables the current comeback and sets the stage for accelerated adoption in the months and years ahead. Now that we understand Stellar's foundational strengths, let's dive into the specific developments and partnerships that are fueling XLM's institutional resurgence. This is where the comeback moves from theory into tangible, measurable momentum. One of the most important drivers is recent bank and financial institution integrations. Multiple banks around the world have been quietly testing Stellar's blockchain for cross-border payments and liquidity solutions. Unlike other networks that struggle with transaction speed or high fees, Stellar allows near-instant settlement with extremely low costs, making it highly attractive to banks handling large-scale international transfers. These tests are not casual experiments. They're part of long-term pilot programs that could lead to full-scale deployment across institutional networks. Each successful integration strengthens XLM's position as a reliable tool for enterprise finance, not just a speculative asset. Another factor driving the comeback is Stellar's expansion into stablecoins and tokenized assets. Financial institutions are increasingly exploring stablecoins pegged to fiat currencies as a bridge for faster, cheaper payments. Stellar's network allows the creation of compliant, programmable digital assets that integrate seamlessly with banking systems. Recently, there have been announcements of collaborations where Stellar-backed stablecoins are being tested for cross-border payroll, remittances, and corporate treasury operations. This is critical because it positions XLM not just as a cryptocurrency, but as an infrastructure layer for institutional finance. We're also seeing fintech platforms and payment providers embrace Stellar. Companies seeking to modernize their payment systems are leveraging Stellar to reduce friction, accelerate transaction times, and improve transparency. For instance, remittance companies that once relied on slow correspondent banking networks are now piloting Stellar to handle real transactions across continents. Each of these implementations creates a network effect. The more institutions use Stellar, the more valuable and trusted XLM becomes. Additionally, network enhancements and protocol upgrades are contributing to this momentum. Stellar has been implementing technical improvements that increase scalability, reliability, and transaction speed. These upgrades ensure that the network can handle growing institutional demand without bottlenecks, making XLM an increasingly attractive choice for large-scale financial operations. Institutions are not only looking at the token itself, but also at the robustness of the underlying technology, and Stellar's recent upgrades make it clear the network is ready for significant adoption. Finally, it's important to highlight strategic leadership and vision. Stellar's team has been proactive in establishing relationships with regulators, financial authorities, and enterprise clients. Their approach emphasizes compliance, transparency, and long-term partnership, which builds confidence among institutions wary of regulatory risks. This is a major reason why we are now seeing renewed institutional interest and why XLM's comeback is not just temporary hype. It's part of a carefully orchestrated, strategic resurgence. In summary, this shows that Stellar's comeback is backed by concrete actions. Bank pilots, fintech integrations, stablecoin deployments, network upgrades, and strategic leadership. Together, these factors are driving real institutional momentum that is only going to accelerate as adoption grows, setting the stage for XLM's next major phase in the market. Let's explore the market impact of these developments and why this comeback is so significant for XLM holders and crypto investors. The first major point is that institutional adoption fundamentally shifts the narrative around a cryptocurrency. In the past, XLM was often seen primarily as a retail-focused token, traded for speculation or small transactions. But as banks, payment providers, and large-scale financial institutions begin integrating Stellar into their operational workflows, XLM's value proposition expands dramatically. It's no longer just a token to trade. It's a functional asset used in real-world financial processes, from cross-border payments to tokenized fiat transactions. This type of adoption is far more sustainable than hype-driven speculation because it's rooted in utility and tangible demand. Next, consider the liquidity implications. Institutional partnerships typically involve large volumes of capital moving through the network. As more banks and fintech platforms utilize Stellar for payments and settlement, the demand for XLM naturally increases. This not only strengthens the token's liquidity but also reduces volatility over time, as the market becomes supported by real operational use rather than speculative trading alone. For investors, this is a key signal. When institutions rely on a blockchain network for core financial functions, it creates long-term upward pressure on demand and value. Another critical factor is market perception and credibility. Cryptocurrency markets respond to confidence and trust. Stellar's visible institutional integrations and protocol upgrades send a powerful message to the broader market. XLM is being taken seriously by the financial sector. This credibility attracts not only individual investors but also institutional investors, hedge funds, and strategic partners who might have previously been cautious about crypto exposure. Each new partnership reinforces Stellar's position as a highly legitimate, enterprise-ready blockchain, differentiating it from countless other tokens with little to no real-world application. Moreover, the timing of this comeback is strategic. The crypto market is increasingly recognizing the importance of infrastructure-focused tokens, projects that provide functional solutions rather than speculative hype. Stellar fits perfectly into this trend, providing low-cost, fast, and scalable solutions for global financial institutions. Early adopters of XLM in this new phase could potentially see significant benefits as the network expands, adoption increases, and Stellar solidifies its position as a bridge between traditional finance and digital assets. Finally, the long-term growth potential is enormous. As Stellar continues to scale, integrate with more institutions, and support tokenized assets, the network effect grows exponentially. Each new partner or financial use case strengthens the ecosystem, making it increasingly difficult for competitors to displace Stellar. For investors, this is a strong indicator that XLM's resurgence is not a short-term rally, but a structural comeback that could have sustained market implications for years to come. The specific catalysts and upcoming developments that make it clear XLM's institutional comeback is just getting started, and that this momentum is likely to accelerate. First, let's talk about expanding bank partnerships. Stellar is actively engaging with both regional and international banks to pilot its blockchain for cross-border settlements. These are not small-scale experiments. These are initiatives designed to test large volumes of transactions, integrate with existing banking infrastructure, and evaluate scalability in real-world financial environments. Once these pilots are successful, it's likely that banks will move from testing to full implementation, creating a steady, long-term demand for XLM as liquidity within the network. Second, Stellar's role in tokenized assets and stablecoins is becoming increasingly critical. Institutions are exploring stablecoins pegged to fiat currencies as a bridge for faster, cheaper, and more transparent payments. Stellar's blockchain allows compliant, programmable assets to operate seamlessly with financial institutions, and several fintech companies are already running pilot programs to leverage XLM in this capacity. These initiatives are significant because they turn XLM into functional money for global institutions, rather than just a token traded on exchanges. Third, network upgrades and protocol enhancements are ongoing. Stellar has focused on improving transaction speed, scalability, and reliability, ensuring the network can support growing institutional demand. These technical improvements are crucial because institutions need a blockchain that can handle high-volume, mission-critical transactions without failure. Each successful upgrade strengthens confidence in XLM and encourages more organizations to adopt Stellar for enterprise applications. Fourth, regulatory alignment and compliance initiatives are helping remove barriers to adoption. Stellar has been proactive in establishing relationships with regulators, ensuring that its network operates transparently and within legal frameworks. This creates trust with institutions, which are typically cautious about deploying unregulated technology. By addressing compliance from the outset, Stellar positions itself as a safe, reliable, and scalable option for financial institutions looking to integrate blockchain into their operations. Finally, we have early adopter momentum and network effects. Each new institutional partnership amplifies the value of Stellar's ecosystem. Banks, fintech platforms, and corporate users that start leveraging XLM create a reinforcing cycle. The more participants trust and adopt the network, the more compelling it becomes for additional institutions to join. This cumulative effect signals that Stellar's comeback is not a temporary spike, but a structural, long-term movement in the blockchain space. In short, the combination of strategic bank integrations, tokenized assets, technical upgrades, regulatory compliance, and network effects ensures that XLM's institutional comeback is only at the beginning. The groundwork has been laid, early adoption is in motion, and we are likely to see this momentum accelerate dramatically over the coming months and years. Why you can't ignore XLM right now. So, to recap, Stellar's institutional comeback is not hype. It's happening right now, and it's backed by real-world developments, bank integrations, network upgrades, and strategic partnerships. We've seen how XLM is transforming from a token primarily traded by retail investors into a critical infrastructure tool for institutions, enabling faster, cheaper, and more transparent financial operations. This is the kind of comeback that changes the game. When banks and fintech companies start relying on Stellar for real transactions, when stablecoins and tokenized assets become standard on the network, and when Stellar continues to scale and upgrade its infrastructure, the long-term implications are huge. XLM is positioning itself as a cornerstone of the next phase of institutional crypto adoption, and the momentum we're witnessing now is likely just the beginning. Here's the key takeaway. If you're an XLM holder, a crypto investor, or simply someone who wants to understand which blockchain projects have real, tangible utility, Stellar is a network you cannot ignore. The foundations are solid, the adoption is accelerating, and the strategic direction points toward continued growth and relevance in the institutional space. So here's what I want you to do next. Hit the like button, subscribe to the channel, and tap the notification bell so you never miss updates on XLM, Stellar, and other high-impact crypto developments. Share this video with anyone holding XLM or with investors who want to see the real story behind institutional adoption, not just price speculation. Stay tuned, stay informed, and keep a close eye on Stellar. Because if the current trajectory continues, what we're seeing now is just the opening act of a much bigger story in crypto adoption, and XLM is right at the center of it.